Don't set it and forget it, Cory. Your financial matters are too important. I posted this recently on social media how you need to pay attention to your health, to your faith, to your family, to your community, and to your wealth management.
Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to Upticks with Jake and Cory. Cory, welcome back to the show.
Hello, Jake. Thank you for having me back.
And do you have any exciting updates or announcements before we dive into today's episode?
We have 3 new team members at Falcon Wealth Advisors. That's an exciting announcement.
Absolutely, Cory. Why don't you introduce them?
We have 3 new team members that started on April 1st. One is Kevin Ellis, who is joining Jake, you and I as another advisor on the team. Secondly is Dylan Veach, who is working Jake with you and your financial planning group as a paraplanner. And 3 is Lindsay Freemeyer that joined our communications group to work with Luke and with Colby.
Yeah, we're very humbled and honored for these 3 professionals to join our group, Cory. It's also kind of fun and easier to onboard 3 people at the same time.
It's true.
Credit to Sam for basically making sure all of that went smoothly with our back office. But yeah, we're excited to have them join us. And it's just a byproduct of all of our great clients continuing to refer new clients to us. So again, as our firm and our practice continues to grow, we continue to add support and staff to be able to manage that growth. So we're excited to have them join us, and thank you, Cory, for bringing that up. With me,
Absolutely.
Golf season's in the air, so I got more golf coming down the pipeline. Rachel and I have been very busy furnishing this new house we bought, Cory. And you still haven't been over. Shame on me.
I know.
I need
It's
to get
time
you
to
over
rectify
there.
that.
Maybe we can find some time here. You need to come over and check it out.
I know.
But we're real excited. We bought a piano, and I asked you this. Are you a piano player?
I think I can maybe play the Jurassic Park theme song. Maybe one other song. I think that's about it, though.
Probably more than me. Rachel and I are taking lessons on an app because we were like, all right, we bought this piano. We don't want it to just sit there.
Yep.
And it looks great in the room, but again, I want to be able to at least do something on it. But it's really hard playing with both hands. Like it's very difficult actually. But I actually welcome that challenge. It's kind of it's a good stress relief. It's good to just do something different and new and challenging. So I'm excited. Hopefully, but hold me accountable. You need to check in on me from time to time. Make sure I'm still learning.
That's all right. I'm just going to pop in. We joke I haven't been to your house, even though you live 2 minutes away. I can just pop in.
I know. We have you over
banging
there.
away on that piano.
We'll get on that. Okay, good. So, but before we dive into today's topics, we had a great listener suggestion, Cory, that I know you wanted to talk about. So
Yes.
The topic is April 15th and tax withholding. What do you have for us, Cory?
This note came in from a listener who is a CPA, and the note was to check your tax withholding on April 15th. It's a great time of year to do this because if you are receiving a large refund, maybe it makes sense to adjust your withholding down so there's less money being withheld so you don't have a big chunk of money coming back to you that could have been yours and is yours throughout the year. If you have a large liability, check your W-4 to evaluate your withholding or make quarterly estimated payments. Assess ultimately where and why there is money that is due. Was it Social Security? Was it investments? Pay the tax where it's earned. And I think this is all helpful points that he has made here. And the final point that I want to just make on the subject was he talked about a client that had an issue with their tax withholding and not nearly enough was withheld in 1 year because of the way they changed their W-4. But the tax tables and the W-4s may not have the appropriate tax withholding. So it ultimately is important for people to evaluate this on an annual basis. This is a great time of year to do it. And your friends at Falcon Wealth Advisors can help you with your tax plan.
Yeah, it's really good. And again, none of this, what you're saying is tax advice, of course.
Correct.
But it's a really good point. I'm glad he brought that up to you, Cory, that you're right. If you got a big refund or you're owed a lot, let's go ahead and make that change now so you don't have this issue next year. We certainly do tax planning at Falcon Wealth Advisors, so we are forward-looking where tax advisors or CPAs are backward-looking. But let's work with your CPA Let's help develop your tax plan so that, again, you're not paying too much or too little, and we got things balanced as much as you possibly can. So good. I'm glad he shared it. Certainly timely. Tis the season for tax season right now, Cory.
Right.
And I'm glad he brought it up in there.
Yep.
Good. And then before we go into today's topics, again, I want to thank all of our viewers out there and our listeners. Our subscriber count continues to grow. A quick call to action. If you're not already subscribed to Upticks on your favorite podcast platform or YouTube, please feel free to do that. Give us a thumbs up, 5-star ranking, like and share our content. The whole reason Cory and I are taking time to record Upticks is that we want to enhance financial literacy at scale. And hopefully we're able to do that for you and your family and friends. All right, Cory.
Play ball.
Play ball. All right.
Jumping into our headlines, Jake, you have how to use charitable donations to offset your income taxes.
Right. So speaking of tax planning, I think a lot of people out there, Cory, and not necessarily our clients, are donating to charities. However, they're not getting the tax input that they could or should be getting. So I enjoyed this article. Just some quick tips on this. First, you got to pick a viable charity. You want to make sure that it's a qualified, like your kids don't count as a charity, right? So if you need to give your kids money, so be it, but you're not necessarily going to be able to write that off on your taxes. So you want to make sure it's a 501c3 and that you understand the charity and what your money is actually going towards. Another good tip is that you can donate appreciated assets, Cory, like stocks, for example. So if you have a stock in a taxable account, rather than sell that stock and donate cash, just give the charity the stock. Then it's a win-win because you potentially could be able to write off some of that from your taxes based on your tax filing status, but you also don't have to pay taxes on the gain. So that's a good one. You can also appreciate, I believe, a home, cars, or anything else that's appreciated in value. You can use a donor advised fund. So this is basically just a type of account. So it's like a Roth IRA, 401k. There's an account called a donor advised fund. This is where you basically can put money in there, potentially write it off and keep the money invested and then dish out a little bit over time. And then 2 more quick ones, Cory. There was bunching. So again, maybe you put all of your charitable contributions in a donor advised fund for 10 years, potentially write that off on your taxes in the year you do it, and then you give the money out slowly over 10 years. Or maybe you say, you know what, to your church, I'm going to give you 5 years worth of donations now. I had a stock that went up. I'm going to go ahead and give that to you now. I'm going to bunch that contribution or the donation now so that then you don't have to do it in little increments over the years. And then the last one, Cory, and if you want to chime in, certainly feel free. If you're 70 and a half years of age or older, and if you have an IRA, you may be able to donate a portion of your IRA account to a charity and it not be counted as taxable income. So all of these, again, should be used in conjunction with your CPA. Of course, your friends at Falcon Wealth Advisors, we can do tax planning and look at some of these strategies for you, but just something to be aware of and be cognizant of. That if you're already giving to charity, make sure that you're getting some bang for your buck from a tax purpose. Anything you want to add there, Cory?
Just a real quick note. I agree with everything that you highlighted, but the last point that you just made there is a lot that's included, a lot of different strategies. If you're charitably inclined whatsoever, make sure you're working with your fiduciary advisor to ensure that you're doing that in the most tax effective way.
Right. Very good. Okay, good. Let's go on to the next topic, Cory. How high yield CDs turn into 0.05% CDs while you're not looking.
Yes. Did you read this article, Jake?
No, I don't think so. I think I might have saw it, but maybe once you had it on the doc, I didn't read it. But go ahead.
Okay.
What do you got?
Any idea, since 2022 when the Fed started raising interest rates, do you have any idea how much money Americans have put into CDs or certificates of deposit?
My guess would be $50 billion.
4 times that, $2 trillion.
$2 trillion?
$2 trillion has poured into
Americans out there.
Have poured into CDs since 2022 when the Federal Reserve began
2
raising
years?
interest rates. 2 years.
Good for Americans. That's a lot.
And ultimately, the reason that's happened with rates going up, the rates that CDs pay have become much more attractive than they were in the last 10 or 15 years. So customers have sought out CDs for higher interest rates. But sometimes the issue, and what this article really highlighted, is that when those CDs automatically roll or mature, the banks may roll them into a new CD that's paying a whole lot less interest. And the requirements around how banks need to communicate that to customers when a CD is set to mature, what the new interest rate's going to be, They can literally, Jake, let you know that a CD is going to mature. It's going to automatically be reinvested. And if you want to find out what the interest rate will be, call this phone number.
What?
Yes.
I
And
don't like that.
neither do I. And the similar issue was highlighted with high yield savings, with savings accounts, with high yield savings account that banks, and you actually have brought this up on the show before, Jake. There was an article that we touched on a few months ago that banks have left existing customers and savings accounts that are paying very low rates while advertising much higher rates to attract new customers. So the takeaway from all of this is don't make any assumptions around what it is that you're earning. Confirm that and assure that for yourself. And also, Jake, you and I, as we've talked about on the show, have a great solution for clients of Falcon Wealth Advisors that are looking to optimize interest on their cash.
Yeah, very good, Cory. Yes, exactly. Don't set it and forget it, Cory. Your financial matters are too important. I posted this recently on social media, how you need to pay attention to your health, to your faith, to your family, to your community, and to your wealth management. I think a lot of people, sadly, assume that the bank is just going to take care of them. Hey, I got a CD, Cory, paying 5%. It's going to automatically renew. So then they think they're going to get that 5% forever. No, you're right. When that CD matures, the bank could automatically roll that into one earning 1% or less, like this article suggests. So you have to stay vigilant. You have to stay on top of it. Hire a wealth advisor. Meet regularly with your financial planner at Falcon Wealth Advisors, just to make sure all this stuff is lined up. You don't want to. You don't want to just ignore it and think it's all set up and going to be fine. It doesn't work that way. It doesn't work that way.
No sense in assuming that the bank will just take care of you.
Right. It doesn't make them bad people, but you have to understand they're here to make money too. If they can pay you 1% on a CD, they're going to do that all day long, right? They don't want to pay you 5%.
Correct.
So, yeah, good. I like it. Good one. What's next?
All right, Jake. The newest home buying puzzle. What to pay your real estate agent.
Right. So this new legislation that we've talked about on this show, they are reshuffling the deck on these real estate agents' commissions, Cory. And so now maybe it'll all be free. Maybe not. So
maybe
there was some good takeaway. But my question to you, Cory, before I want to go over my personal experience I just had, and then I want to give some insight on this. But my question to you is, because of everything that's going on, the article basically suggested that a lot of people are going at it alone and are not using an agent. So my question is, if you were going to buy or sell, if you're going to buy a new home, or if you were going to sell your home, knowing now that the whole industry's kind of flipped around on that, would you try to go at it alone and not use an agent, or do you still see value in using an agent?
I see value in using an agent. I think that the reality of this change and my understanding of it, and I think the reality is it will take some time to see how things adjust and adapt and what changes. But from my perspective, it seems like the value of an agent is not necessarily what's changed. It's more about how they're compensated. And if there is a discussion or negotiation or opportunity to have that conversation, I don't think that this inherently means no need to hire a real estate agent. I just think that the way that they get paid, there's more options now, and the buyer has some input in it. What do you think?
Yeah, but this is tough. So here's my personal experience. I got very lucky with this, Cory. So most of my clients know that I've met with lately. Rachel and I bought a house. We love it. And our agent did a great job. So when we bought the house, we used an agent, and she did a great job with showings. I mean, we looked for a year and a half, maybe. We looked for a while. So she did great, very patient, knew exactly what we wanted, didn't waste our time much at all. So, and then she helped negotiate. So again, well worth it. But what's weird about this, Cory, I didn't pay her that much, right? The seller did, right? So of course, to me, it was worth it. Now, would I have paid her thousands and thousands and thousands of dollars? I don't know. Again, she's worth it. She's a great agent. I don't know that, though. I don't know how I can answer that. So when I sold my house, though, I didn't use an agent. I got very lucky. I sold it to one of my really good friends who happens to be an attorney and somebody that I trust wholeheartedly, right? So I didn't have to pay the big commission when I sold it. So I really lucked out, right? I really lucked out. I didn't have to pay. Yeah, and good for me. Good for me.
Bravo to Jake.
Well, this is what my concern is, though, right? So now that they're flipping it, when you or me or whoever goes and buys a home, you may have to pay a whole lot more in commissions than the old way. However, though, I agree with that, because when you sell a home, maybe your commission is lower. So I personally agree that the payment structure needed to be revamped. I do. I agree with that. However, I do think agents, at least the ones that I know and I've worked with, earn it, right? They earn their fee because some of these agents, Cory, will show 30, 40 homes and spend hours and hours and years with somebody before they're paid anything. So I agree. I'm not saying that agents shouldn't get paid. And I got very
Right.
fortunate with my experience because, again, I sold my house to a friend who's an attorney. And, but it's still, there's still things that go on that I think an agent adds value to. So my point is, I think the consumer is going to need to be educated. I
Yep.
think that the agents have a bumpy road ahead of them, but our compensation structure has been changed in our industry a ton.
Sure.
And I think it's been for the benefit of the client. And I think transparency, I think both sides, is my point, should have to pay. I think the buyer should have to pay their agent and the seller should have to pay. And this is my hypothesis, Cory.
Mm.
I think as a result of this, home prices will drop or flatten, because think about it. Today, both agents were getting paid based on the value of the home. So technically, Cory, both agents wanted the price of the home to be high.
Correct.
Which I don't like. I would love to see the buyer's agent get paid, I don't know, an hourly fee, a fixed fee, whatever, or maybe even on how much they can drive the price lower. And maybe the seller gets paid on that. So if you had two agents, actually one driving it lower and one driving it higher,
Yeah,
I
competing
think
on
that
price.
will impact housing prices as a whole and help the housing market. So
wasn't that the nature of the legal argument in the first place, though, was that because commission structures have been the way that they've been, that has also like made home prices artificially high? Because because I struggled with the same thing, Jake, when Cass and I bought our house. I recognized that the buyer's agent, who was representing us as the buyers, wanted what was in our best interest, but I simultaneously recognized that nobody gets paid unless I buy a house.
Right. Yes, they want the transaction to happen.
The transaction needs to happen.
And both agents want even though your agent will negotiate lower and they'll advise you, but in the end, Cory, if their comp is based on the value, they want you to pay the most. And I don't like that.
Right.
I don't like that.
The flip side, I think what could be good, though, is, to your point, agents that might show someone 30 or 40 houses over a year or two that are relying completely on a transaction to get compensated. Maybe now they can be compensated for their time and the value that they add and what they bring to the relationship. And that's a good thing.
Yeah. Wouldn't it be great if they charge per showing? I bet that would save them tons of time.
It would. Probably it would.
Because some of these people, I didn't look at 30 homes, but we looked at a fair amount. And again, we were very respectful of our agent because I didn't want to waste her time. I didn't think that was fair, right? I didn't go look at every home that came up for sale in my neighborhood. So again, I don't know the answer. I think there's a lot of decisions that need to be made, and there's a lot of questions in the air. I just think it ultimately, hopefully, will be good for the industry, and hopefully the agents do well because of this, and ultimately, more importantly, hopefully the consumer does also. Obviously, I want both parties to do well, but I would like to see, again, it'd be great if the buyer's agent, I think if a buyer said, I'll get paid based on how much I reduce your house cost, I'd want to hire that person. So anyways, we'll see how it goes. All right, good.
Yeah,
let's go on to the next topic here. Do you have something else?
No, let's move on.
Okay. So the next topic here, Cory, where are this year's tax refunds going? Right into a debt hole. What is this?
So about 40% of Americans rely on refunds, tax refunds, to make ends meet, which is up 4 percentage points from last year. So 40% of Americans rely upon tax refunds. And we've talked about this some on the show, but that's a good stat to share that came from LendingTree, actually, that reported that. This year, the average refund is a little over $3,100 as of mid-March. Really, this article highlighted, Jake, for a lot of younger people, specifically people that if they have more student loan debt after student loan payments have restarted, that is a cohort or a demographic that has accumulated more credit card debt. But I'm curious, Jake, from the conversations that you have with clients, are you having a lot of conversations about tax refunds and how people are using them, and or credit card debt and how people are trying to tackle it?
Not as much, Cory, not yet. Maybe after tax season's over. I think a lot of my clients are familiar with their tax situation. I think some of them for better or worse, good or bad, they like getting a little bit of a refund because they use that for a vacation or to pay off debt or whatever. As long as it's not substantial, it doesn't bother me. If it was 20 grand or something, I would probably tell them like, hey, look, this money is better used in your financial plan. So no, it hasn't come up a lot lately, but it is something that I think our financial planners are well equipped to have that conversation with our clients through their tax planning meeting. So I would encourage all of our clients that are watching or listening to Upticks to schedule a time with Jake Cross and his group, and they can look at your tax planning situation. And if you are getting a big refund or small one, or if you have some debt, let's talk about managing that. So that's good, Cory. I'm glad you brought this article up. But what about you? Do you have a lot of conversations about this?
I do. Admittedly, I think people want to have more conversations about when they owe money, taxes, than when they get the money back, generally speaking, in terms of what people bring up. But I have observed and I've noticed that the larger trend that's highlighted by this article is that there are more people with more debt. And I think we all recognize that the prices of a lot of things rising is part of the byproduct for that. But we've talked about this extensively on the show and don't need to get into a deep conversation about that. The bigger point is that these interest rates that a lot of credit cards charge can be quite expensive, and it can make it very difficult for people to get the balances paid down. So you really want to be cautious in using those cards and cautious in where you're spending your money. And because I can imagine someone is in a situation where they're relying upon a tax refund to make ends meet, they're relying upon a tax refund to pay down debt that they've accumulated, it might be time to take a step back and build out more of a big picture long-term plan so you can resolve this issue and move past it. And there may be some adjustments that need to be made along the way, but I do think that's still a much healthier approach than just dealing with, I wonder what the surprise is going to be this April when I file my return. I have accumulated this credit card debt and I don't know how to get rid of it, but it's very behavioral in terms of all of it. And we, like you highlighted, Jake, and our team can help clients with this. If somebody wants to get out of the loop of dealing with this on a year-by-year basis, we can help. And that's what we want to do.
Yes. Yeah, very good. Good one, Cory. I like it.
All right, Jake. Why you need a financial health day? A financial health day. What do you got?
Did you read this article?
I didn't.
This one's great, Cory. I love this idea. And so the whole point of this article is just like people take personal days to go to the doctor or get their car worked on, why not take time to roll over an old 401k or review your subscriptions or check on your budget like you just kind of mentioned?
Mm-hmm.
Just like, and I talked about this already on the show, but just like you need health, family, faith, and community, that all those people or entities need your time and attention, you should do the same for your wealth management. Even if you have a wealth advisor, again, I think we do a great job for our clients. However, our clients still need to be somewhat engaged in this process, right? We can't do it all. We're not going to do it all for you, right? You've got to, I don't know how much money you're spending at Costco, right? Or whatever.
Right.
So schedule time with yourself. If you're working, take a day off or take a half day and say, you know what? I'm going to spend 4 hours, Cory, on Tuesday. I'm not going to go to work and I'm just going to look at my budget. And I'm just going to make sure that all of my money is going where I want it to go and that my values are aligned. Subscriptions is great. It's a slippery slope. $10 for this subscription, 5 for this, 20 for this. Those all add up. Go check in on all your subscriptions maybe one day and cut the ones that you're not using or you don't value anymore. I just think what this will do, Cory, it'll give people a lot of confidence and help them better align their money with their financial plan, which is really what we try to do at Falcon Wealth Advisors in every one of our review meetings. And so I love this idea. Take a financial wellness day once a quarter, twice a year, whatever that needs to be, and go in and check in on some of these things with yourself. Check your credit card balances, right? Or maybe maybe make it fun. Maybe you've got a lot of credit card points. Take a day to figure out how you want to spend those points, right? Or plan a vacation and do the finances around that also. So again, I thought this was just a great idea. I really appreciate, University of Pennsylvania's Wharton School did this. So I thought it was a great topic and a good thought. And I think everybody should do it. Even if you have, again, a wealth advisor, you should be doing it. What do you think?
Yeah, it brings awareness to it, and which is an important step. I'm curious, Jake, how do you do this?
Thank you for asking, Cory. So, I'm a real big fan of incremental gains, compound interest, little things. So I might schedule to practice golf 20 or 30 minutes every other day or whatever, right? So I do that the same way with my finances. So I I try to, and I don't do it every day, but every day, Cory, believe it or not, I check in on my spending, or I have
Mhm.
a reminder to do that. So that's my quick check-in, is that I will go pull up eMoney, our financial planning software, and make sure that my money is allocated correctly. I'll also check in usually once a week on my portfolio. I try to look at that, somewhat regularly, just to see what's going on in the market. And then quarterly, I will try to pick a topic, whether that's, I don't know, property and casualty insurance, or Rachel and I's house, right? It's been a big topic of our financial discussion lately, and try to just make sure we take a deep dive and then everything's going. So I kind of set small little micro check-ins, Cory, and then quarterly, and I'm lucky because I do this for a living, but I also use it as a training opportunity for our financial planners, and I like them to go over my financial plan with me, just to see, and maybe we'll pick a certain topic that we want to go deeper in and go over that. So that's kind of how I do it. Again, everybody's got to use their own method. I like small check-ins so it doesn't feel so daunting. I don't know if I could take a whole day off work to do it, but maybe that works for you, for example. Do you do this?
I do it. It's more similar to you. I think, to your point though, Jake, that if you are doing it on a smaller scale, maybe you don't want to take a whole day off of work. I would argue though that if you had these reminders to do this and you weren't doing it with regularity, maybe what you do need is a day to do it, right? Like, so I think
Yes.
it's one of those
Yes.
things that it's easy to say, I need to address this, I need to make a change, I need to make an adjustment. And if you don't want to take a day off of work, pick a Saturday or Sunday and schedule it.
Right.
I mean, my wife and I do this for taxes when it comes time to get everything to our accountant, when it comes time to make quarterly payments, all of that. I will literally schedule it on my calendar so I know nothing's going to get in the way of that. This is when I'm going to approach it and make sure that I have my arms wrapped around the whole situation.
So you send everything to your CPA at once?
Mm-hmm.
Interesting. See, I'm different. So I
Collect
send them as
everything.
they come in. So as I get a 1099, a K1, whatever, I get it. My accountant has a vault, basically a share file.
Mm-hmm.
I scan it in and I upload it, and then I'm done with it. So I kind of just get it to them as I get them. But again, I'm glad you brought that up. So whatever works for you might not work for me, and vice versa. But the key is we have a process in place,
Yep.
and that we're checking in. Just like I try to schedule what I'm going to eat for lunch for the week, my health. I talk about exercise. I know Rachel's going to want to take a very long walk on the weekends. She doesn't think it's long. I think it's long, but it's good for both of us, right? And Einstein. So again, that's my health, right? Check in with my finance,
Yes.
check in with my diet, all that stuff. This should be included in everything that you're doing. All right, very good, Cory. We got time for one more here. Oh, is it a chart, Cory?
It is a chart.
All right, here we go. America pulls back from values that once defined it. This says Wall Street Journal NORC poll finds. What do you got?
Yes. So I'm going to start by stating that this is a big yikes from my point of view, Jake, and I'm curious what your perspective is. This is highlighting a survey that the Wall Street Journal conducts, and this is looking at the percentage of people who say that certain values are, quote, very important to them. And this data is going back to the late 90s when they first started doing this. But as you can see here, and if you're listening at home and aren't watching this, the specific values are patriotism, religion, having children, community involvement, and money. And all of those core values have declined meaningfully since 1998, except for money. The only priority that the Wall Street Journal tested that's grown in importance in the last 25 years is money. It's cited by people as 43% of people saying it's very important. 25 years ago, they said it was 31%. So my question, Jake, is, have the core values for Americans changed, and what does that mean?
I don't know. Well, first off, who are these people that they polled? Do you know anything on that?
It is people,
1,000?
it is, well, I actually think that it's a lot of people that read the Wall Street Journal, which maybe makes sense, that money is something that's going to be, more pertinent or relevant. But the full
That's
poll
true.
results are, let's see here. I've got it right here, Jake. This was conducted by the NORC at the University of Chicago, and it was funded by the Wall Street Journal. But there was a little over 1,000 adults that were sampled for this.
So I hope, Cory, that they have a tainted sample size. And this is why, well, first, you're right. It's very alarming. I don't like it. However, 1,000 is pretty small. And
yeah, well, there's hundreds of millions of people in our country.
Right. And I don't know if I agree with it because, well, it depends. It depends on the age demographic, because I would argue, this new generation, at least they claim that money's not important to them. and they care more about work-life balance. Maybe not starting a family as much, but I would think faith would be included. That community is really big, saving the world for a lot of these people. So I really think, and I hope, Cory, that it was a flawed sample size. I don't feel that way. I feel that based on what I read, I feel that patriotism probably sadly is right, that may be down, maybe religion, sadly. I don't know about community involvement and having children, though. I don't know what the birth rate is of America right now. So I don't know. It is alarming if it's true. And I think it all starts with leadership. I think it all boils down to not only leadership on a national level, but also on a local level. Governors and mayors and even business leaders. I think it starts there. And if you get good leadership in these communities and these cities and these states, then those values and things that should be important will come back of high importance. So this is a black, dark cloud of capitalism. I think capitalism is great, and I think it's awful. And so you have to be careful with it. Just like what you could say, patriotism can be great and awful. There's a light and a dark and a light and a shadow with everything. And so I think it's going to require leadership, though, to pull us out of this rut. What do you think?
A few things. One, this is aligned really nicely with the message that you've given through this whole show, Jake, which is that money, wealth management, your finances are one thing that you should be checking on, but not the only thing, which I think is a little bit different than what's reflected in this data. Again, keeping in mind it was a small sample, but one observation that I had from looking at this, Jake, from what it started in the late 90s, is that this really is the era where quite literally the internet has been most relevant and prominent. And it makes me wonder, the world getting more global and getting more connected, that people values do change in a lot of ways, though, where people are less involved in their community, like literally getting offline and going out into the community and having an impact and questioning and challenging and contributing, all of those things. That may be very much a situation where, correlation is not causation, but that is an interesting observation that I had when I looked at this data, just as far as the timing goes, especially with it all accelerating after the pandemic in 2020, when, people were locked down and screen time went up. We know it's true.
Right. And that's scary. And
it is.
There could be a lot of good that comes from that, but there also could be a lot of bad. I think that's a good tip, Cory, for the screen time, is to check in on that. Like, it's pretty crazy. If you look at that, you can add that setting to your phone. And if you're spending 4, 5, 6 hours on your phone every day, what else could you be doing with that time? Now, maybe that's your job, or maybe you're an influencer, or it is productive, or maybe you're reading a book on your phone, right? Or whatever. Maybe you're watching Upticks on your phone. That's perfectly great, useful time.
Yeah, stay right here and keep watching. I'm just kidding.
Stay right here. So, but again, I love that. It's a good way to wrap up today's episode. I think it's thought-provoking, and I think it's great that we're just bringing a little bit of awareness to that to people, so that you check in on that and think about it, and think about your values and your community and what's important to you in there. So thank you, Cory, again. Thank you for bringing that up. And thank you all for tuning into Upticks as always. That's all the time we have for you, and we hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.